Commodity TV, ladies and gentlemen. Today it's the third day here at PDAC in Toronto, and you see it in my back. The people are coming all the time. So the last 2 days has been very busy, and this day the interest is still high. So I have the pleasure and honor to talk to John Griffith, the Chief Development Officer of Gold Royalty. John, thank you very much for your time.
Well, thank you very much. Very exciting to be here, and it's a very busy PDAC, which is great for all of us.
Yes. What is your impression about the last 2 days and today?
Well, I think it's not surprising that in this kind of commodity environment, we've got, outsized participation, a lot of involvement, a lot of excitement, and, tremendous amount of meetings. So we're really excited.
Yes, and of course, Gold Royalty is a gold-focused royalty and streaming company. And last year you have had record revenue growth and portfolio expansion. So what have you achieved last year?
Well, it's a very auspicious time to be talking to you because it's actually our 5th birthday next week.
Congratulations.
And it's worth reflecting on the fact that, 5 years ago, when we started the company, we had 18 royalties on longer dated assets. We've now got 8 producing royalties, record revenue last year. Above all, we have record growth ahead of us and peer-leading growth over the next 5 years. So we're in a tremendous position to really capitalize on these robust commodity prices. Gold at $5,000 an ounce plus. What's not to like?
100%. And as you said, just 5 years and you achieved so much. So congratulations about that. Just give me a bit, or also our visitors, a bit, a sense of the numbers from last year. So GEOs, what was everything?
Sure. GEOs were just about 5,200. Revenue about 17.7.
Yeah.
And really, I think we're at the foothills of what we're going to achieve with the portfolio that we built in terms of GEO growth. We're going to end the decade with GEOs north of 30,000.
Wow.
And it's all from assets that we already own, all from assets that are already paid for, and all from assets that are low risk.
Okay.
Very low risk in terms of expansion potential.
So 30,000. What's your margin nowadays?
So here's the beautiful thing, right? Take 30,000 GEOs, very easy math, multiplied by $5,000 gold, and you've got an SG&A of about $7 to $8 million. We've got to adjust a little bit for tax. We're going to be generating free cash flow of somewhere around $120 million, give or take, by the end of this decade. And that's really, really powerful. And I'll leave you with a further message on that particular point. That if you think about it from a valuation standpoint, that's probably 2 or 3 times above where we're trading today.
Amazing. So your market cap in US is nowadays around 1 billion?
We're about 1 to 1.2 billion using fully diluted shares.
Wow. Okay. And that's 2025. So that was an exceptional year.
Yes.
And it's good to speak to you because you're the Chief Development Officer. So where do you see the developments, the improvements for this year?
It's a great question because a lot of people have said to me, surely in high commodity prices, there's the scope for doing deals is less. That's not true. We actually had the largest company in our sector, BHP Billiton, writing a stream to Wheaton Precious Metals for $4.3 billion. That's going to permeate all the way down through the industry.
Okay.
What it means, it's a great time for companies who have non-core product like silver or perhaps copper, whatever it might be, to monetize those commodities. So we're seeing a lot of that. It's also a great time for individuals who own individual royalties, whether they were generated through M&A or prospecting, to monetize those royalties. Our pipeline from an M&A standpoint is absolutely robust. It's a really exciting time.
Do you have a special focus on a commodity? Of course, I said you are mostly gold focused, but how do you want to do that in the future?
Yeah, no, I think our name gives it away a little bit, Gold Royalties. Our primary focus is clearly precious metals, by which we define gold, silver, and PGMs. But in addition to that, we have a lot of focus and understanding in what I call the primary LME traded commodities like copper, zinc, and nickel. So certainly there's scope for diversification. Right now, we're 90+% of our net asset value is in gold.
Yeah, perfect. All that stuff also needs money, of course. So how is the situation nowadays at the bank, and what do you want to blame more?
Well, that's been very transformational year as well for us on the capital structure side. So we've ended up the year with without any debt. We converted the convertible debt into equity. We've paid down our credit lines through an equity raise that we did to overfund the acquisition of Pedra Branca. And now we have $150 million of undrawn credit lines. We have approximately $15 million of cash on the balance sheet. And we have additional proceeds we expect to come in from deeply in the money warrants. So we reckon we've got about $170 to $200 million of dry powder to deploy in growing the company.
That's a lot of gunpowder, dry powder to do all this stuff, 100%. And of course, you have a great portfolio, but not every project is running 100%, running smooth. So there's one in Bosnia-Herzegovina. What has happened there, and how do you see the situation for the future?
Yeah, that is a fantastic question. I think what we've really got there is a multi-decade asset that has just transitioned ownership into the hands of a much better capitalized operating company in DPM. And if you look at Vareš is going to be a top 10 silver mine globally, operated by one of the best operators in the world.
It's Adriatic, right?
Adriatic sold to DPM.
Ah, okay, gotcha.
And so DPM has taken a fresh look at the asset. And that was really what created the slight hiatus in the production profile, while DPM took a fresh look at how they're going to approach mining. They're literally turning it upside down. Adriatic was mining top down.
Yeah.
DPM is going to mine bottom up. And so while they went through that transition in developing all the underground infrastructure to be able to do that, we had a lull in production. But it's going to pick up. 2026 is going to be a great year, I think, in terms of production and output from Vareš for us.
Perfect. And it's Europe. I'm from Europe. And of course, the Europeans are a bit slow, but also the European government is awakened now. And so hopefully we will see some support also from that side.
Yes, absolutely. Look, I mean, I think in this world, in this day and age, you know, geopolitical risk is like shifting sand. You know, I think having an asset base like ours, which is 85% North America, the rest of it being in Europe, as you mentioned, and then also in Brazil, we have a heavy weighting in Brazil with our last two acquisitions, topping up Borborema, and then also the Pedra Branca asset we acquired from BlackRock recently.
Tier 1 jurisdictions.
Tier 1 jurisdictions. What's not to like?
One location. That's something very important, 100%. Where do you see the next catalyst within the next, I would say, 3 to 6, 9 months?
So I think our recent acquisitions are probably going to be the biggest catalyst. When you look at the Pedra Branca asset we acquired, and we announced this when we announced the transaction, that the 12-month production as at July last year, 2025, was 2,700 geos roughly, and that run rate is going to be at least the same, if not better, because we met with the new operator who's taking over when the transaction closes. Corex will be buying the assets from BHP, and they have plans to really debottleneck and increase production. So we expect at least 2.7 plus thousand ounces coming out of that asset. So it's going to be a big change, a big shift, a big impact for us in 2026. Obviously, Borborema ramping up, Côté continuing to ramp up, and the rest of the assets are performing well. So we're in a great position. It's all the hard work we did. As I said, it's our 5-year birthday. All that hard work we did for the last 5 years to build the asset portfolio that we've got. It's now delivering, and that's the exciting news. It's delivering at the right time. $5,000 gold.
100%. Thank you very much for your time. It is a great company. Great to talk to you, and I'm looking forward for the next news releases.
Well, thank you very much.
Thank you very much. So, ladies and gentlemen, that was John Griffith, the Chief Development Officer of Gold Royalty, and you heard it. So it's a great company. It's a gold-focused company in Northern America and Europe. They have so many new projects coming online. Check out the company, and bye-bye here from Toronto.